You are listening to Rubber Minute, where words do remain.
Hello and welcome to this episode of Right the Wrongs. Every Wednesday and Saturday, Right the Wrongs raises public awareness on pressing human rights issues and creates an incubator of activism. I'm Tan Fei, and today we will be talking about Evergrande, one of China's largest firms, and its recent debt crisis. Evergrande is China's number 2 real estate developer that also dabbles in a plethora of sectors from electric vehicles to entertainment parks and soccer. Its corporate revenue accounts for 2% of China's GDP. Over the past few months, a liquidity crunch has put Evergrande's many real estate projects in jeopardy, and hundreds of thousands of investors stormed the headquarters of the company in Shenzhen, chanting, "Pay us back," as they protested against delayed payments or suspended housing constructions. So what led to this current crisis, and who is at stake? Like many real estate companies, Evergrande enjoyed favorable interest rebates in China as the government and the Chinese central bank aimed to stimulate growth through attracting investments. Thus, the company has a track record of profiting with borrowed money. Moreover, Evergrande also relies on pre-sales, where housing projects are funded by consumers who make payments before the completion of the projects, which essentially means that the project's continuation relies on the sales. However, in recent years, to curb the burgeoning debt in the real estate industry, the Chinese government introduced debt restrictions for companies with different levels of debt tolerances based on an assessment scheme called the 3 Red Lines. This imposed severe limitations on Evergrande to finance its operations with further borrowing due to the huge leverage that already existed in its balance sheet. Actually, Evergrande was already one of the most indebted real estate companies in the world before new policies were implemented in August 2020. Due to the strategy of pre-sales, the vast majority of the company's inventory consists of unfinished real estate or other investment projects that cannot be turned into cash for debt payments. Moreover, Evergrande's balance sheet covered up the amount of credit crunch it has, as the asset values of the housing projects are recorded higher than they actually are. The Chinese housing market is seeing a demand plateau, and the property prices stabilized in recent years. Evergrande's effort to boost sales through discounts to get cash inflows from customers also backfired, as the falling prices ironically eroded customers' confidence and trust in the company, while surprising prices across the industry, making it even harder to break even. Now, Evergrande is struggling to meet interest payments on its debt, and its share price has tumbled by more than 80% since the start of 2021. All these forebodes a potential disaster for many stakeholders. Firstly, the general population and ordinary investors in China are hit the hardest. The crisis has sent shock waves across the real estate industry, which accounts for 29% of China's GDP. The deposit in the financial service branch of the company has been tied up in financing the unfinished housing projects that will not be delivered anytime soon, which complicates the problem as investors cannot get their deposits back or be compensated with liquid housing assets. Secondly, the credit crunch will likely impact other corporate investors who have a stake in Evergrande and who are also relying on Evergrande's interest payments to finance their investment projects, thus further disrupting the supply chain. The mounting distrust will also distort customers' and investors' behaviors, making a demand boost even less likely. Even though Evergrande might seem too big to fail, the Chinese government has signaled that it is not willing to offer a bailout because they are expecting to use Evergrande's crisis to send a warning against reckless borrowing in the financial and real estate sectors. However, countless savings accounts and retirement funds were swept up in the mounting liabilities that Evergrande is struggling to deliver. It turns out that ordinary individuals and consumers are often denied their rights to information symmetry in financial decision-making. This occurs when companies retain certain information in their marketing strategies, or when there's a lack of resources dedicated to making financial literacy rates on par with the advances made in the industry. With such inherent flaws in the market mechanism, the choice of intervention versus deregulation will remain a tricky one, as illustrated by the documentary film Inside a Job by Michael Moore on the corrupted banking scene behind the 2008 financial crisis. The alarmist comparison between Evergrande and Lehman Brothers might be over-exaggerated, but with the rise of financial service scams in China in recent years, prudence is advised for the world's second-largest economy and everyone in it. That's all for today's episode. Feel free to engage with us on our social media channels. You can follow us on Facebook and Instagram and join us for further discussions on our Telegram group. Or leave us a comment at theverbamanent@gmail.com. This episode was written and produced by Tanfei and brought to you by Right the Wrongs and the Verbamanent. You can find the program wherever you find your podcasts, bringing you detailed updates on pressing human rights issues. Till next time, take care.